Hey guys, what's going on? Welcome to the video. So we had another week in the market full of volatility, with this time getting the move to the upside. In this video, we'll be going over what to expect next from the stock market, including what needs to happen from the broad market for either larger upside or this move to fail and head back lower. And we'll also be going over the top trade ideas that I'm watching in the week and weeks ahead. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart, which is the best gauge for technicals and the trend for the overall market. So in last week's video, we went over 510 per share as being the must-hold support level, as that was the previous established higher low, and we went over that if it broke, things could get ugly again for the market once again. What played out this week was an initial violent sell on Monday, which held that 510 key level after a slight undercut below it, which trapped some shorts before reclaiming. Then it was able to reclaim back above the 520 and 524 to 525 key levels. After that, there was a large gap up on Wednesday, which was able to hold 535 as new support, before a further rally up to the major 546.4 to 548 zone, which has been the top of the range since the beginning of April, and it closed above that zone on Friday. So overall, this has been a very constructive move for the bull case, though there will be some important things to watch for in the week ahead. As long as it holds above 546.4 to 548, the range breakout is intact, and next step it can target 554.8 and then 560 to 562 as the next major resistance levels above. Now it's important to note that the trend has gotten a bit overextended here, so there is a pretty good chance for either a failed breakout or a fake out to the downside before picking that next directional move, possibly to the upside once again. So my personal base case for the week ahead would be something like this: rally up to fill the gap at 554.8, then get a decent sized pullback, which could either hold a back test of 546.4 to 548 as new support, or break below there. If it breaks below there, it would be important for that not to lead to a violent sell lower. If it breaks back below it, then below 535, that would restart the bear case and have potential to head much lower once again. Though if it breaks below without much downside follow through, maybe it chops around for a bit and then reattempts the break, something like that would be what buyers want to see to set up a larger rally higher. Overall, I do not think that the market is out of the woods yet or anything, and there is plenty more fundamental and headline risk ahead of us, though the market does often bottom during max fear and uncertainty, and there's a saying that the market climbs a wall of worry after bottoming, so anything can happen moving forward, though this move was a great step for buyers, and price action from here will be a key tell for the overall trend. So before we get into some individual stock trade ideas, we have a big earnings week coming up, including 4 of the mega caps on Wednesday and Thursday, with Microsoft and Meta reporting Wednesday afternoon, and Amazon and Apple reporting on Thursday afternoon. These will all be major market movers, and there are also a bunch of other names on my watch list that report, and I'm sure for you guys as well. So what should we expect from these earnings reports? Well, as we saw from Google and Tesla, who reported last week, don't expect any big earnings misses or anything, as tariffs didn't have any effect on Q1. If anything, there's a pull forward of demand, which can be a net positive for companies' Q1 numbers. But at the same time, expect most of these companies to give limited to no forward guidance because of all the uncertainty on tariffs and everything else in Q2 and beyond. If the company is in a great capital position though, aka has a lot of cash on the balance sheet, and the stock price has taken a big hit, there's a good chance for large stock buybacks to be announced. So for example, all of the mega cap tech companies would be likely to announce stock buybacks, which can be another potential net positive for earnings reactions as well. Alright, so now getting some trade ideas and top stocks to watch in the week ahead. Starting out with Robinhood stock, ticker symbol HOOD. So we've continued to talk about this stock quite a bit on the channel as a prime candidate to outperform the market on the way back up, and my personal favorite name to accumulate more of on dips. And last week it showed big time strength after successfully holding the trendline breakout and rallying all the way back up to $50 per share. So I continue to be very bullish on this name, and it is one that reports earnings in the week ahead on Wednesday after hours, so that's important to be aware of. It reclaimed back above the 50-day moving average, which now becomes key support at about 44.9, and I would consider immediate upside in play as long as it holds above there, due to that reaction it had once it reclaimed, showing that it's a major level. Obviously anything can happen at earnings, though I would lean bullish on them, and ideally either get a small pullback or consolidation to build energy and potentially set up larger upside afterwards. So something like this playing out, where breaking above $50 per share can trigger the breakout and next leg higher for the stock. Now taking a look at Tesla stock, ticker symbol TSLA. First off, taking a look at technicals, it had a very clean move last week after holding a higher low just above the 215 to 220 key zone. It then had a favorable reaction to earnings, and after some consolidation, it broke above the key trendline resistance, which triggered the breakout and got a very strong move to end the week up to 287 per share. So if we zoom out to the daily chart, the 200-day moving average, which is currently at 291.3, is the next major resistance above 287, and it has acted as the top of the range since early March. A consolidation period or pullback would be most likely before it attempts to break, and heavily depends on what the overall market does as well, though a successful reclaim and hold above the 200-day moving average can result in a much larger upside move for the stock. And for my fundamental take on the stock, earnings numbers were very ugly, though as we've gone over before, the market's reaction is always the most important. And with Tesla, the story from here is pretty much fully the outlook for future years with robo-taxis and the humanoid robots. There's a great chance that hype builds up more in the future, and as long as the story and thesis of both of those continue, the stock can go much higher on straight hype and projections without any real financials to back it up in the short term. It probably continues to look insanely overvalued in the short term, but of course the only thing that matters to make money on it is the stock price, and that will be driven by the story and the potential of those future rollouts. And AST Space Mobile, ticker symbol ASTS, is another stock that I'm keeping on close watch in the week ahead. So what it's done during this overall downtrend is it's pulled back to backtest the previous key trendline resistance as new support, which successfully held with a strong reaction from buyers. And since then, it has built out a well-defined consolidation between 20 to 20.25 support and 24.93 to 25.4 as resistance, along with the 200-day moving average slightly below there at 24.37. This consolidation has been building out for 3 weeks below that resistance, and if/when it does break, it can result in an explosive move higher. Above 25.4 can target the 50-day moving average, then 28, and then 30 to 30.6 as those next key resistance levels above. This is a stock that can move very quickly once it gets going again as well. So that's everything I'm watching for in the week ahead. This past week was a great move from buyers, though the market is not out of the woods yet and there's plenty of risk up ahead. Though overall, it is most likely that the bottom is in for the market, though it won't be a straight up move from here. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and any questions you guys have in there. I'll catch you all next time, and good luck trading the week ahead, and peace out.